I want to start off with the bearish wave count. The reason because this one has the potential for a washout to the downside. This is the point at which this bearish wave count is no longer possible, and then we can start focusing in on the bullish wave count. Okay, on the bullish wave count, so we've got a slightly different look to it. So we've got, instead of a WXYXZ, we're looking at a WXY. Now, if you're new to Elliott Wave, you may be wondering, why would we cover both a bullish and a bearish wave count? And you see Elliott Wave is deductive. Anything is possible until it breaks one of Elliott's rules. Hi everyone, this is Jeremy with See the Waves, and welcome to this video on gold, where we're going to cover the Elliott Wave analysis. And I'm going to start off with this video. We're going to cover a bearish wave count for gold, and then later on in the video cover a bullish wave count for gold. Now, if you're new to Elliott Wave, you may be wondering, why would we cover both a bullish and a bearish wave count? And you see Elliott Wave is deductive. Anything is possible until it breaks one of Elliott's rules. And so both the bullish and the bearish wave count that I'm going to share with you here in a moment, both of them do not break Elliott's rules, and so they're still possible. So we need to keep an eye on them. And later on, I'll share with you which one of these two options I think has a higher probability of shaking out. But I want to start off with the bearish wave count. The reason because this one has the potential for a washout to the downside, a collapse to the downside. If we simply take a look here using classic technical analysis, we can see a horizontal support zone coming into play right here. And so on Sunday, August the 8th, prices came down, tested the zone. It has violently rebounded higher, and it seems to be trading sideways for the last couple of days. So what this bearish wave count suggests is that from the August 2020 high, so for the past 12 months, it's been grinding lower in a triple zigzag. So this triple zigzag would be labeled as W, X, Y, and then Z. So gold is grinding lower. Now within the Z wave of a triple zigzag, we're going to look for an ABC type of zigzag. And so it looks like we've got A in place, and then we've got B in place. C waves of a zigzag are going to unfold within 5 waves. So what this implies is that we would get a wave 3 of C to the downside. Now, third waves tend to be some of the longest and the strongest. So that could very well be the wave, or would have to be the wave, if it's going to end up breaking this support shelf. And then after breaking this support shelf, it may likely come back and retest the bottom of that shelf, and then give one more test here to the downside. So this type of a wave count would dig down into the 1500s from the perspective of gold. And basically, it has very little room to the upside. It is testing the 78% retracement level of this wave 1 downtrend. And so basically, this needs to hold below 1800, and we're at 1785 right now. So there's not a lot of real estate to the upside. Now, if it goes to 1801, 1805, or even 1820, that's okay, but I would not expect it to last very long at those prices if it does give it a shot higher, and if this is the wave pattern in play. A break up above this high right here would suggest that this bearish wave count is invalidated. So this is the point at which this bearish wave count is no longer possible, and then we can start focusing in on the bullish wave count. So speaking of the bullish wave count, let's go ahead and load this up. Okay, on the bullish wave count, so we've got a slightly different look to it. So we've got, instead of a WXYXZ, we're looking at a WXY. And from this Y wave low, we can fit in an impulsive wave higher. Now, this impulsive wave higher would be labeled as wave A or wave 1. So this could be wave A of a larger zigzag, or this could be wave 1 of a larger impulse. We're not sure what that could be at this point. After that, we've got clearly a 3-wave move lower. This rally has surpassed this wave low here. So it looks like we could be working ourselves higher here. Now, under this bullish wave count, this would not be an extremely bullish wave count. This would basically take us up to 1920, possibly up to higher levels. If we are getting ready to unload in a wave 3 higher, then it should make a lot of upside progress very quickly. So I'm not certain of how fast things would unfold to the upside, because there's several other wave counts that would just show gold moving up to 1920, maybe a little bit above, and then maybe finding some resistance and then heading back down towards lower levels. So where do I think that, which one do I think is a higher probability move at this point? I believe that the higher probability move is that we're going to see 1920 within gold. Now, I say that with a little bit reserved because of that bearish wave count. It is possible. It is possible that it could unload to the downside. But the reason that I have a slight edge and a slight favor to this bullish count is because if we just simply look at how large this rally was that took place from here to there. So let me go back to the bearish wave count. This will make more sense. Okay, so within the bearish wave count, there we go, just kind of doing a little landscaping here. Okay, within this bearish wave count, what we are looking at, and this is not correct, within the bearish wave count. Yeah, that would be correct. Within this bearish wave count, this rally here is at a larger degree of trend than this rally is right here, okay? So this rally on the left-hand side is a larger degree of trend versus the degree of trend for the rally on the right-hand side of the chart. However, the rally on the right-hand side of the chart has actually progressed further from a percentage basis. It's progressed about 7%. The rally on the left was about 5%. I know that doesn't seem like a lot, and we are kind of, picking at stones here a little bit, but that type of a difference is typically not indicative when you're looking at a smaller degree of trend. And so therefore, it is still possible. It has not broken any of Elliott's rules. This is just a guideline, but I would give a slight edge that the market is likely going to rally up to 1920. And quite frankly, if it rallies above 1800, then that's going to lessen the impact of a watershed to the downside. And so therefore, I would lean towards 1920 coming here within gold. So if you like what you see here, go ahead and give us a thumbs up down below, leave us a comment, be happy to chat with you. Want to wish you all the best of luck in your trading, and we will talk to you soon. Bye now.